Welcome back to Hey Kentucky. As with everything else in the world, since the coronavirus took hold of everything, financial markets are changing all the time. So we want to bring back the managing director of Jewel Financial, Quint Tatro, again. Thanks for being with us. You were here with us about a week ago, and things couldn't have looked any worse. And now here we are a week later, and things are starting to look up as far as the stock market is concerned.
Yeah, it's very interesting. I think I was looking back the last time I was on the show, the market was 2,000 points lower than where we are today. And we actually went down another 2,000 after I was on your show. But as you mentioned, that means we're 4,000 points from the low. It certainly is a respite, but I do think people have to be very careful when looking at this market. I'm not so sure that the worst is over. I think we'll have a lot of bounces and a lot of retracements and some more scary times ahead here.
And is this kind of bounce up due to healthcare industries really, talking about either a new testing or a vaccine, something like that, that's really giving the entire market a bump?
So I don't want to get too micro on you, but the reality is that the market got too stretched to the downside. If you think about pushing a beach ball underneath water, sooner or later, when you let that beach ball go, it's gonna pop right up, and it's gonna come out of the water and then settle back down. The market lost $10 trillion in market cap, a 34% decline from peak to trough. That basically insinuates that we're going to be shut down in this economy for the remainder of the year, which I don't think even the more dire projections have us being in that camp. So the market just got too stretched to the downside, and now we're seeing a very sharp rally off those lows. And we probably settle in this area somewhere while we sort of wait to see how this virus plays out.
So I know that when we're treating the virus and talking about what to see as far as people getting infected with it, we look towards what happened in Asia and what happened in Europe, and then that kind of spread here. Are the markets the same way? Do the financial markets in Asia and Europe give us any indicators of what's going to happen here?
Yeah, and you bring up a very good point. Asia has been trading very well since they supposedly have kind of calmed things. But I think what's happened is that over the last several weeks, the market, which seemed to be hanging on every headline and every data point, has sort of collected itself a little bit and realized that regardless of the headlines, we don't necessarily have the entire story, both from the good or the bad. We don't know the total number of people that are being tested or not being tested. We don't know the number of people that were even tested in China. I mean, it's just it's kind of a hodgepodge. So the market is sort of taking a step back, which is a good thing, and it's stopped this panic. And it's starting to say, okay, let's look at this from the standpoint of where we go from here economically and how we're going to sort of recoup. And remember, we had a huge stimulus bill that was passed that the market liked a lot, and that's coming through the system as well. I think a lot of people don't understand how unbelievable in size this money is that's coming down the pike for small businesses. And I realize people are sort of making fun of the $1,200 check, but across a family of four, that's a lot of money when you factor in the children and both individuals. So the amount of money that's coming down the pike for this market to digest is incredible as well.
Do you believe that this money is more of a, hey, I've lost my job, I need to hang on to this for emergencies, or do you think this will spur some spending in the economy?
In regards to the consumer checks, I think it will be, for a majority of people, I think it will be a lifeline and much needed. And it will help to keep things moving. So hopefully rents are paid, groceries are purchased, etc. And so I think that's a big lifeline. The small business forgivable loan is contingent upon a small business using this money for their expenses, their salaries, their payroll as well. And remember, a lot of these small businesses that can get all of this money and it's retroactive. They could actually hire back employees. It is forgivable. There's an option that if the math is correct, that they can have that completely forgiven. So that money should go into the economic system to keep us moving forward.
Quint Tatro, thank you so much. You make this so digestible for people like me who don't always understand the market. So we appreciate you being here with us on Hey Kentucky.
It's a pleasure, and I want to leave you with one last thing, and that is that there still is going to be unbelievable opportunities out there in this market. People need to remain calm, remain patient, and just keep doing what they're doing regarding their 401k or their long-term investing plan.
And just breathe. Just breathe. Yeah, all right. Thank you so much for your insight. We appreciate it.
Thank you.
All right, more Hey Kentucky right after this.